Welcome to the financial planning update for April 2022. We'll start as we do usually just with a bit of an update on the markets in general. We see here a continuation of a theme which has been developing for a few months now, the UK market performing quite substantially ahead of most other global markets. So in some respects that's quite pleasing to see. As we've commented before, the UK really has been the laggard over the last decade really. So to see the UK now starting to outperform quite consistently is definitely pleasing to see. What's also interesting to note here is that the world index, shown here in the green, has actually started to lag slightly behind the US. Now, of course, the US makes up a huge proportion of the overall global market, so it tends to really dictate the direction of travel. And so it's very common to find the world index nestled somewhere in between the FTSE and the S&P in America. But at the moment, we see the world index actually underperforming both the UK and the US markets, which suggests that performance in other markets, namely Europe and the Asian markets, has actually been worse than that of the US, which then drags the global index down ever so slightly. We're also in a very interesting place at the moment with the portfolios. We see here quite an unusual situation where the year-to-date performance on all three portfolios is actually almost identical. We're at one of the crossover points as the portfolios progress on their journey. And if we look back across the chart, you'll see there's been several other crossover points, and the two portfolios will tend to trade places as time goes on. So notice at the beginning of the chart, we start up with the cautious portfolio on top. That position reversed itself in early April as we started to see some recovery, and now the portfolios have converged once again. I will mention that we are seeing some more positive market numbers just in the last day or two, which aren't yet reflected on these charts. But it'd be interesting just to interrogate what's going on here in a little bit more detail. Now, the first thing to mention is that we've seen falls, of course, across most of the major equity markets, of course, the UK being the notable exception. But we've also seen some pretty significant falls in bond markets as well. So that this is the UK Gilt All Stocks Index, which just takes a cross-section of UK government bonds. And although we don't really hold a great deal of government bonds within the portfolios, it does paint a picture in terms of what's happening in fixed income markets. And of course, we don't tend to talk about these quite so much, but we see here the UK Gilt Index down by around 8.75% year to date. So we are seeing falls across different asset classes and not just the headline indices, if you like, the headline stock market indices. Now, we are thinking about the duration of the fixed interest market within the portfolios. We're thinking about making some changes there just to cushion the impact of this environment we find ourselves in. Of course, we now see interest rates starting to increase. We think that's likely to continue for a period, and indeed it probably will accelerate, we expect, as we go through the summer. And just on that note, it'd be interesting just to explore some of the other themes that are unfolding in markets at the moment. So, of course, no surprise to anybody, but the Ukraine-Russia issue continues to impact on markets. And as I've commented before, it's not so much the direct impact of the conflict that's worrying markets, it's more the knock-on implications. We're now starting to see very significant food price inflation. That's taken a little bit longer to feed through perhaps than it has on energy prices, but I think all of us now are starting to see a bit of a pinch when it comes to the supermarket checkouts. Sainsbury's has commented today that consumers are perhaps being a little bit more cautious in their shopping, and of course we're starting to see these price increases feed through into our daily essentials. We've also had a bit of a market upset because of what's going on in China and other parts of Asia at the moment as they continue to impose COVID lockdowns while the rest of the world in effect returns to some sort of normality. This has spooked markets slightly because, of course, if the policy in China is for zero COVID, we have to ask, number one, how that will be achieved. Number two, if it can be achieved now with the Omicron variant. And number three, even if it is achieved, how long can it be sustained for in a country like China, which is a huge trading partner for the whole world, effectively. So I think markets are starting to question the zero COVID policy, and these lockdowns are now starting to have quite a significant impact on supply chains. We've seen many factories shut down for periods of time, ships queuing up outside of Chinese ports because there's no staff to dock the boats. So all sorts of issues bubbling up there. And then just in recent days, of course, we've had the announcement that Europe is planning to sort of put further sanctions and further bans on Russian commodities. And although perhaps ethically that's the right thing to do given the current circumstances, that's undoubtedly going to put perhaps further pressure on oil and gas prices across Europe. So we may yet see more inflation starting to work its way through. Our own view is that we probably haven't quite seen the worst of the inflation spike quite yet. I think that process probably will continue through to the early summer, at which point perhaps we'll start to find a top, we'll start to find a peak to the increases that we're seeing at the moment. And then probably that will start to calm down over a period of time leading us into next year. But of course, bear in mind, inflation is measured on a year-on-year basis. So by the time we reach April next year, we're comparing prices to today. So hopefully this time next year, we certainly won't still be seeing high single or even low double-digit inflation. And as I've mentioned, of course, it's likely that central banks will now start to move in that respect. The Federal Reserve in the US has certainly become somewhat more robust in its commentary when it's suggesting future rate increases as we go through the rest of this year. Now, in other financial planning news, of course, we've just entered the new tax year. So the most immediate change I think that people will be noticing is the national insurance hike. So an additional 1.25% added on to both employer and employee national insurance liabilities. Now, of course, that won't affect you if you're drawing a pension income. Pensions are not subject to national insurance, although, as the government has mentioned, the plan is to roll this national insurance into a separate tax, effectively a health and sort of welfare tax, which is going to be used to fund the NHS. So we wait to see the mechanics of that. It also bears mentioning, of course, we now have new ISA and new pension allowances available. So I think it's really important to use those allowances, especially in the current environment. Of course, every pound that we save in tax is a pound that remains within your portfolio. So please do give consideration to making use of your ISA and pension allowances early in the tax year. And although the current environment is clearly unsettling for people, I think, of course, people are concerned about the Russia-Ukraine issue. People are also concerned, understandably, about rising cost of living. But we're still in this situation where the rate of inflation is very, very significantly higher than the rates available on cash or other fixed savings vehicles. So really investing in a portfolio is the only way to try and achieve an above inflation return in the medium to long term. In the short term, we may see a situation where inflation runs a little bit above average asset class returns, but I'm sure that position will normalise itself before too long. So that's everything we have for the moment. We're going to come back next month with our usual advanced financial planning strategies, but just wanted to spend a little bit more time focusing on what's going on in markets at the moment. As always, of course, if you have any questions or you feel that we could be of any further assistance, please don't hesitate to contact a member of the Buckingham Gate team. Thank you.